Hello, and welcome to Stefex Trading Floor. It's the close of the week. We're on Friday, and of course, we had a very good month. The month that has just passed, and this month, starting this month, we had 100% winning rate on our trading positions, including the VAX indices, or what we term as synthetic indices. This short video is we just want to explain a scenario whereby we have found, especially guys in our VX or in our VIP signals group, or anybody else who is getting our signals cannot be able to utilize, especially on our signals that we are giving each and every day. So we want just a simple explanations on how you should go so that you can be able to maximize on profits and be able to take everything off the table instead of missing on most of the trading opportunities that we had, especially like on this week. If you notice, most of our trades, or like this week to be specific, we had all our trades, we had picked them based on weekly candlestick patterns or based on price action on weekly charts. Though we also take trades from 4-hour charts, daily chart, but in the direction of the weekly chart, so that we can be able to minimize force trades and maximize on the trades that are going in our direction. An example like this one is the one that we give to everybody, including all of all social medias, including our Facebooks. And before I forget, you can see this is our Stefex trading floor. This is our Facebook. You can go and hit our likes there. It's actually growing big, and you can see this way you had the trade. This way it was on Monday. I think yeah, the start of this week on Monday, on June 6th. You can see this way you had the trade. It was on a buy. We are moving up, and we had quite very lucrative results, and then you can see this is what you had. Then apart from there, then let us go back to the chart and check if you had taken this trade from this point. If you calculate the average pips, we had 197, that is 200 pips profit, but you find most of the traders exited even before we hit the first 50 pips. So this is how we want to demonstrate how you can be able to take two trades, and actually even in our robots how we are doing it, and we're able to demonstrate right now here how you should go about it. Every time you open a position, it will be very good if you open two positions, because even if you check even what you have done here, even in our result, you can see we have, in fact, we have three. So that when you hit the first 100, you can cross the first two, or you have to, you can close the first one and then break even the other one. And when you go to our algorithm, the one that we use again to trade and also to check on our results, you can check, even if you don't understand this, you can see we have two buying orders, which is we have coded as buy ticket, which is under order set. You can see you have two trades. One, the take profit, you can check here if it's a buy position. The take profit, you can see it's a buying price plus 1,000 pipettes. Compared to this underscore point means these are pipette. So if you divide by 10, this one will give you 100 pips. Then this one, the second order, you can see after you break even, we are giving it at TP. In fact, here it should be plus 400 pips so that it can sum up to 500 pips. And that's how we do it. The selling order is the same. TP, the first TP you can see is the selling order, or the selling price minus 1,000. This one will give you 100 pips down because it's a sell. Bid means to sell. And these two, we are opening two orders. Then after that, if you come to the order modify, this is where now you create what we call a trailing stop loss. A trailing stop loss, these are just simple codes that you can also do on your own. You can also learn on your own, like here at Stefex Trading Floor. These are self-taught with a few guidances. And you can check here where the order modify means when the trade hits 110 pips, you simply order modify with 5 pips. You break even with the 5 pips. And then from there, you can check. Then what happens? Now you continue following the trade with 1,000 pips. If it's a sell, you continue. If it's an OP buy, if it's a buy, you continue following the trade with 100 pips. This one you continue following down with 100 pips until if the price comes back and hit back your trading stop loss. That means now you know a trade that you have break even. That means you are at risk free. If you can be able to demonstrate that one here, it means If like in such a trade, this was our buying price, this is our stop loss, few pips behind this, the previous week's candle. If you hit 100 pips from this point, this will come at around, here. If it's around this point, let's say this point is 100 pips, you open 2 orders with the same stop loss, with the same open, but take profits different. Like you can see our TP was here, a psychological level of 1.0. This is where we had a major resistance level. We go to the daily chart, it's this point. For our chart, it is one and the same point, it's at this resistant point. So if we started here, this is where we hit our buy, you see the price has been moving up. Why did you exit quite early? Even next week, we expect another candle to continue moving up with this price. So when the initial trade hits the first TP, which is 100 pips, let's say it's around here. If it is a 96.07, then it's 97.07. 97.07 is around this point. So when it hit, it will cross the initial trade. Then you move this stop loss from here of the second trade, and you move it here, and you cross your first order with 5 pips. Then when the difference between now your trading stop loss, which is now on the positive side, and your trade should be 100 pips. If this one moves another 50, this one moves 50. If this moves, like now we are 200 here, this should be around this point, 97.07. So this is how you should be able to follow, so that the first days you banked something, even if this price comes back and hit your trading stop loss, you have already closed that you have some profit here to bank, and the trade that goes all the way up to your TP, and that's why like in our trade we are putting it to 500 or 300 pips, whereby if this price comes and hit our TP, the whole trade could crosses automatically and you take everything. So this is how we meant when we say that you should be having a trailing stop loss. Now, let's do this based on our strategy. Like this on our code. We are almost through with one of our best coding system. In fact, we are almost there. We'll be doing it in the next few days. 1 or 2 will be through. So let's go and try to do it here. We got strategy tester. This is easy. You know how to test this. Don't take, even if you don't know, this is just a matter of running. So we can be able to do, especially on, let's do on the one that is here, which is Audi JPY. I know those who've been in the coding classes, you know what we mean. So just hit it in a very simple way. So let's just stop this one and start afresh. So what do we have here? Let the market first of all and see what we'll have. That's the chart road. So I want you to check as the market start, you can see you have opened a trade here. If you go to the journal or to the results, you can see you have opened 1 and 2 trades with a different TP. One is at 500 pips away from the price, but stop loss is the same. TP are different. The first one is just 100 pips, then you break even after that. And you can see the trade here. This is the first TP at 100, is at 500 pips point. Even if you measure this one, it will give you just one the same thing. This is 100, it's an average 100. This one is 500 pips. So that's how we've put it. Then from there, let the trade line and see. You see when the trade hits the first TP, which is 100 pips, if you go to the result, what do you see? It has hit the first TP, and then the price, the second order has modified, and you can see our initial price was 85.53, but this one has it at 85.58, 5 pips above the open price. So that's how we've coded it. Then this one will cook. The difference between this one and this one, of course, will be 100 pips, and the price continues to follow that. Let's see. You see, as the price moves up, what can you see here? This one, the trading stops. That's why it's called the trailing, because it trades the price with a difference of 100. If the price comes back and hits it, well and good. But until it hits the first TP, it goes and hits the second TP. That's when it will cause initiate the second trade. This is how we would have done with the USD CHF. And at that point, you can see it has hit the second TP. Then from there, you can be able to come here and check what did we have here under the result. The first trade was at $740. Here you have 37.33. That's actually the difference. You can see the second trade is like 5 times the profit of this one, and it continues to modify is to follow the price. And Under all that, you can see under the journal, this is what we mean by modify, following the price. This is where it started. This was our first tip, we take profit. Then we continued to modify until it hits the second tip. Even if the price comes back and hits, because not all trades will go 500, then 300. Even if you get an extra on the second trade, like 150 or 200, well and good. You don't have to worry about that. But again, you have to give your trades time and wait until that happens. So that's what we wanted to make it clear, especially for our VIP members. Then we know the next, when the coming next week have very good trades. So we just continue in our in a discussion and guiding everyone. Next week we are starting new classes for strategy to teach you on. In fact, this is our strategy. Our strategy is here based on number one, candlestick pattern, then a few indices to fill on that, and a bit of course, a bonus of a bit of coding so that you can do to get what you are doing here. So that is it from STF. All you can say is make sure you trade smart with us and make a maximum profit. That is it, and enjoy your weekend. So that then on Monday, we are back with other trades. You see, like in our VP members, we had over an average of 5 to 8 trades, which all went to a maximum of maybe between 100 to 200 pips. But on the main page, you see we had on one trade. We continue to give you and to educate you more on that. So from us, just learn and earn with STF, and thanks.